In this video, I'll be going to analyze Bitcoin charts and compare the cycle with previous one and briefly touch upon the dominance pattern Bitcoin has created in the past cycle and in this cycle. In this price action, I will also compare where the bottom is and are we looking into one more flush into the market before we try to recover or do some accumulation during this phase. The main focus will be on Bitcoin wave structure and what it could mean going forward. Bitcoin is currently trading at $65,000 and we have seen increased volatility going into the week. There has been short-term upward moves on the daily charts, but they have repeatedly resulted in fake breakouts. This type of price behavior isn't new. We have seen similar recovery attempts in previous cycles that ultimately failed before a final move lower. If we look into weekly basis, we can see that it's following the pattern similar to the last cycle. In the last cycle, we saw such type of 5 waves breakdown, in which the third wave was the largest one. And in this cycle, I see that we are following somewhat similar pattern. Here, this is the first wave, and there is slight recovery, but there's a bull trap again, and there is a flush down. This is a capitulation phase that happened similar to what we see in this March 2022. And similar pattern has been formed. There is a long capitulation wick that has formed in this period, and there is a slow price grinding downward movement. And at a certain point, we see there is a breakdown in the prices, and that's the end of the third wave. And similar dynamic has been building in the Bitcoin charts, as we can see right now. There has been a long capitulation wick, and this week the prices are trying to catch up this week. This may mark the bottom of the third wave, but I'm not sure about it because we may see some more aggressive third wave downward price action and then a slight upward recovery, and then we move into the last and the accumulation phase, which is the fifth wave. Similarly, what we observed in the last cycle, the fifth wave was somewhat of an accumulation wave where we mark the bottom of the cycle, and then from that moment on we see a huge rally which lasted for almost 2 years. So similar kind of structure may happen this time as well. We may see some extra third wave flush which may break the sentiment of the markets, and then we see some slight recovery, or maybe we may see some accumulation over here and then a slight bounce up, and then we move into the fifth wave. Because we cannot precisely predict the final bottom, I prefer flexible buying zones. And that flexible buying zone is, so this is the flexible buying zone I will be looking at the top of the previous highs. This gives us a greater flexibility to dollar cost average our buying prices and don't do aggressive buying at certain buying positions. Personally, I allocate smaller percentage of my overall capital that I need to invest in crypto, and then maybe 1 or 2% I invest daily or on 2-3 day basis. So you do such kind of dollar cost averaging over time in this buying zone. Now, to make it more concrete, I will like to show you the similarities of the structure that are we following compared to the previous cycles. If I just copy this structure to the current cycle and try to minimize it, you can clearly see that there is some similarity that has been built up. So first is the top distribution, and then this is the top of the cycle. Once the top occurs, we see some drawdown of 10-20%, and then there's a recovery that has been seen, and there is a large capitulation that happens. But this capitulation is not over. We see a downward grinding price movement, and then when this breakout happens, we see one more downward price action or the last flush that happens in the market, and then there is movement in the accumulation zone, and then the fifth wave is created. I think we will be following somewhat similar pattern in this cycle as well. And this thesis can be solidified by identifying or understanding the RSI. So RSIs are the relative strength index, which can be used to identify the strength in the Bitcoin prices. And based on the previous cycle, based on the prices, you can see the Bitcoin third wave bottom was marked by the lowest RSI, which is around 25. And then from this day, we see least strength in Bitcoin prices. And here we saw the greatest fear that was created in the market. And then once the market started recover, during the fifth wave, we were already in the accumulation phase. And once this accumulation was complete, we see upward price movement. Similarly, the RSI started recovering from this moment. I feel that similar thing will happen in this cycle as well. As you can see, currently the RSI is sitting near 25, and then we see some recovery that happen, and then in this recovery we see some more downward price action like this. But this is the greatest opportunity to do dollar cost averaging out, because once this is over, we know that there will be strength returning into the markets. I would also like to highlight what happened in previous bear markets and what happened in this bear market. Here we can clearly see that the prices are making higher highs, but the RSI is creating lower highs, which is a clear sign of bearish divergence. This type of divergence usually states that the strength in the prices is decreasing as we move upward. And if this happens continuously for two, three tops, then there is assumption that this is into the bear market territory. And previously also we have observed such kind of behavior. As you can see here, this was the top of the market and this is the second top of the market. But here in the RSI you can see that the relative strength index has dropped from 93 to 70, which is, this is going down, but the prices are going up. So this is a clear indicator of bearish divergence. When such kind of bearish divergence happen, we need to be aware that we are into top of the market and we need to deleverage our positions, or we need to dollar cost out of the market, because these are the tops where anything can happen and there is not much liquidity into the market. There are no buying positions that has been created because of the higher prices. The market is fearful as well. It's also greedy, but there are some people who are fearful of the market because, or maybe they are late into the markets. They think that these prices are not at all sustainable, so they would not invest, and we see your relative prices or buying positions drop over time. How to identify we are in a bull market is opposite to what we do right now. Is like we see that the RSI is getting stronger over time and the prices are moving with it. So the prices are going up and the relative strength index is going up. This is somewhat in sync with what is happening in the prices. So this kind of behavior usually happens in bull markets. As you can see here, they have stated that this is similar to what in bull market conditions. And when this type of indicator is generated over here, you see that we are moving into some positive hype cycle. Next, I will be discussing about BTC dominance and what is happening with the overall crypto markets. In this cycle, pretty unusual things happened with the Bitcoin dominance. Let's compare it with the last cycle. So in the last cycle, we saw this is the top of Bitcoin dominance, which is 73% in 2020 December. And this is the top of the market when the prices were at $37,000 at December 2020. As you can see, as we move up the markets, the dominance is falling. As you can see, as we move up the market, the dominance is falling. Why such kind of behavior was observed is because when Bitcoin was making higher highs, it was basically doing distribution, and during this phase, the dominance was falling because the money was moving into altcoins. So we see a lot of altcoins moving up. We saw Ethereum, Solana, other top coins like Cardano moved like volatile and made their tops. And during this distribution phase, we saw the Bitcoin dominance plunge to the level of 40s. And this marked the bottom of Bitcoin dominance. And this also marked the bottom of Bitcoin prices. Going forward, we saw Bitcoin dominance recover. But in this cycle, when we were near the top, we never saw Bitcoin dominance collapse and we never saw altcoins season. So in this cycle, there is pretty unique thing that has happened is there is no large scale altcoin season which happened in this year's cycle. Only selective few coins like Binance coin, then we have Solano for a certain period, and then we have some privacy coin like Monero, and then Zcash is the only discrepancy that has happened in this cycle and the previous cycle. What do you think? Are we going to see some alt season? I don't think so, because the alt season is already over with some selective coins going up. And going forward, I feel that we'll be seeing selective altcoins moving forward and there will be no collective altcoin seasons. That's all I wanted to say today. See you later.